Hello, I'm Chad Spearman with the CattleFax Closing Bell, brought to you by Pfizer Animal Health. Supply and demand data for the corn market is based on a marketing year which begins on September 1 and runs through August 31st of the following year. The 2012 and 13 corn marketing year began on September 1, 2012 and runs through August 31st of 2013. Over the past 42 marketing years, there have only been 8 years in which the market year high occurred in the month of September. Prices for those 8 years are indexed on the left axis of the chart to illustrate the price patterns for those years. Spot corn prices for the current market year are illustrated by the red line on the right axis. In each of the 8 years, prices broke sharply through the fall and early winter time frame before establishing a trading range into the spring. In most of these years, additional price declines were realized by mid-June at the latest. The current marketing year began with spot corn price at $8.07 per bushel, and prices have trended lower since then, dropping as low as $6.80 per bushel in early January. While there are signs of corn demand being rationed from the export market and the ethanol industry, signs of rationing from the livestock feeding sectors have not materialized. The long-term trend remains lower, but the recent low close of $6.80 per bushel is expected to support the market until later this spring. Ultimately, this support level is expected to be taken out, but not until additional signs of demand rationing are apparent and confidence in 2013 corn production potential is tempered. Price resistance remains at the $7.35 to $7.60 per bushel range, as basis levels remain much stronger than normal. The fed cattle market traded in a wide range this week, quoted from steady to as much as $3 per hundredweight lower. In the south, sales occurred at $122, while in the north, the live market was established at $124 to $124.50. Dress sales were noted from $197 to $199, with the bulk of the trade at $198. Box beef prices softened on the week as demand remained seasonally slow and supplies are ample. Feeder cattle values were steady to $3 lower on the week, while calves were steady to as much as $5 softer. Slaughter cow prices were mostly $2 to $3 higher and amid seasonally tightening supplies. Corn prices softened on the week, yet little news was in the market to drive values higher or lower. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.